As of February/March of 2026, the national average bank interest rate for traditional savings accounts is very low, hovering around 0.039% to 0.41% APY. However, high yield savings accounts from online banks are significantly higher, with many offering rates up to 5%. Interest checking accounts range from 0.07%. So key average rates as of March 2026, traditional 0.39%. So not even a half of a percent. A high yield 1.6 up to 5, depending on the bank and the situation. Interest checking, just terrible. And then the CD 1.5 to 2.4. Okay. That's the rates. And again, I'm bringing this up because this rare opportunity in DeFi is because we have low prices. Coins like Hedera, Ondo Finance, Chainlink, Algorand, Stellar, XRP, all these coins, most of these coins are down 30, 40, 50, 60, 70, 80, even 90% on some of these coins. So this is that opportunity to build a position, prepare ourselves. DeFi summer is something that when the summer kicks off, right, especially after a bad year in crypto, usually the cycle goes, you get a nice boom. We get all-time highs in Bitcoin. The market then goes lower all year. And that pretty much happened last year in 2025. That's what happened. The market gets lower and lower. Everybody keep thinking a pump's going to happen. The pump doesn't happen. Then it flatlines. I think right now, based on what I've been seeing, we're basically in that flat line, trading sideways, looking for a bottom range. Bitcoin, again, could still hit 55,000 or lower. My numbers is about 55,000, bounce from there. It could be 58. It could just stop at 60, okay? But find the bottom, right? And then we're going to accumulate here for several months. We are now in March. We have global issues with the Strait of Hormuz, which is where most of the oil goes through, okay? We have fears of inflation in the United States. The dollar is still the number one currency. Over 40% of all transactions are with the US dollar, okay? We got a new Fed coming into position in the United States, which means he's probably, not based on his history, but based on the president, he's probably going to lower interest rates. He's going to flood money into the market. And that usually floods into high risk assets like cryptocurrencies. Okay. So all of these situations are happening. And if you get crypto finding a bottom, right? 2021 was the peak. 2022, the market went down, but then it started to find a bottom for a while. And then by the time we got into late 2023, okay, it started to creep back up. 24 bullish, and then it peaked somewhere in 25. We are in that part of the market like 2023 where it's going to creep sideways for a while and range bounding most likely. And then this probably summer, 3, 4, 7 months from now, towards the end of the year, from summer towards the end of the year, we might highly likely get that creeping back up. So that's what I'm seeing right now. And again, why are we talking about the interest rates? Because there's better places to put our money. This is Passive Income Network. And that's what I like to talk about, is how to make the money passively. And some of the tools I like to use is obviously crypto and decentralized finance. So let's talk about this situation here. The world's largest regulated stablecoin powering global finance. So my favorite stablecoin to use for earning yields is the USDC, okay, by Circle. It's redeemable 1-to-1 for US dollars. USDC enables 24/7 liquidity for near instant low cost global payments. So you got the near instant regulatory compliance. USDC is the world's largest regulated stablecoin, and it's expanded across many markets, and it's programmable. That means businesses and whatnot can use it. And as of all time volume, that's 68.4 trillion. 1,000 plus banks, blockchains, distributors, and other partners. That's an active network, okay? So industry leading security, fully backed 100% by highly liquid and cash equivalent assets. So remember, these stable coins, Circle and those who issue them, they're backing them with US treasuries, US dollars. And if they got US treasuries, they're earning probably 3% of that money that they're keeping. Highly regulated. Remember, the Clarity Act has passed. Okay. $77 billion worth of circulation. So why am I talking about this? I'm talking about this because the USDC will be the main stable coin we're going to be talking about today, and the ones I like to use when I'm inside a DeFi, right? So DeFi is decentralized finance. That's for peer-to-peer, you and me, businesses, whoever can then put their money into liquidity pools and provide liquidity for lending markets, earn yields, provide liquidity for transactions, swapping markets, trading markets, and then you earn interest basically on that money. Okay. And the way I like to do it is using a native coin, let's say an Algorand, right? And then you pair that with a USDC. Let's say a Ethereum, you pair that with a USDC. Passive income, gold in my dental. Thank God for my mental. Investor fundamentals, told my girl it was simple.